Good evening, ladies and gentlemen, HR professionals, colleagues, associates, and friends. Hope we have had a very pleasant and productive day. Yet again, we are pleased and excited to have, for the second time, Ahmed Oshun as will be facilitating mastering payroll management for us today. Do me one favor, reach out to that friend of yours, to that colleague of yours. We have enough time to join this session. All right, thank you for joining us. Again, I would like to quickly say that Ahmed Oshun is a practicing HR professional specialized in the area of compensation and benefits. Currently, is the compensation and benefits manager at Green
Africa Airways.
Green Africa Airways. Thank you so much for bailing me out. Don't worry, when I fly your airline, I won't forget.
Yeah, sure.
Hopefully, I'll fly them shortly. I've not had the opportunity of entering a domestic flight. All right. So without further ado, but with warmth and applause, let's receive Oshun Ahmed. Ahmed, over to you.
Okay, thank you very much. Once again, good evening. It's already evening. I hope we all had a wonderful day. My name is Ahmed Oshun, Compensation and Benefits Manager at Green Africa Airways. Sometime last 2 months, I had a session here. I had a session on the topic overview of compensation and benefits. I'm here today to have another session named Mastering Payroll Management. Okay. Also, it's always a great honor to be here to facilitate under the HRMentorship learning session, anchored by Mr. Oluyemi Adeosun. Okay, so without taking much of our time, I would like to not to spend more than 1 hour in this session, so that we would go back to whatever we were doing. So today we'll be talking about mastering payroll management. Okay, so this is the content of today's session. We'll first of all talk about payroll management. That is, I would introduce you to payroll management. Then we talk about statutory requirements. Then we move to payroll process. Then lastly, payroll computation. So at the end of this session, I'm sure you would have learned something on this content. So let me start with introduction of payroll management. Okay, so basically payroll management is a part of compensation and benefits, which deals with salary administration. As we all know, compensation and benefits is under Human Resources Department. So what we are trying to say is that payroll management is a part of compensation and benefits. Recall, during my last session, I explained the overview of compensation and benefits. I listed the components of compensation and benefits. They are payroll management, reward and recognition, and work-life balance. So here today, we are picking a part of compensation and benefits, which is payroll management. So basically, payroll is the monthly management of all financial records of salary for employees, bonuses, and deductions in an organization. Also, payroll entails analytical computation of allowances, statutory deductions, and attainment of net salary. This simply means for you to do payroll, you must compute what we call your allowances, you do your statutory deductions, and then you get to net salary. Net salary is what hits our account every month. People know it as salary, but a lot of people don't know the work behind this salary that you're getting. So that is one of the reasons why we are here. So let us move on. Okay, so these are some basics of payroll management. So for payroll, for you to have a good payroll management system, then you must have a well-defined payroll structure across different grades with clearly defined benefits and wages across each grade. This simply means you must have what we call payroll structure, payroll band. That is, you would have definitely different cadres in your organization. There is senior grade level, junior grade level, and there is even C level. So, you know, in your company, you must have several pay bands per grade level. That's what the first point is saying. The second point is saying that you must have a well-defined payroll cycle with cutoff dates for payroll inputs. This means that payroll is very crucial, that you cannot just bring any payroll information at any point in time. There must be timelines for all. Also, there must be what we call cutoff dates. Some companies could do 15th of each month. That is, when we get to 16th, you won't be able to drop any payroll related information. Then it has to wait till the following month. The last point there is that there should be clear definition of requirements for statutory deductions such as PAYE. PAYE means pay as you earn, NHF, and pension. Okay, I think someone is doing something to my slide. Let me unshare and reshare. Sorry. Okay. Okay, here we are again. So here is to talk about payroll components. What are payroll components? First thing, we have the fixed pay. Fixed pay. Fixed pay are guaranteed salary components such as basic salary, housing, transport, and some other allowances. In some companies, you could have the likes of meal allowance, clothing allowance, utility allowance, and what have you. So that's why I said other allowances. But the most important part is the basic allowance, housing allowance, and transport allowance. Also, we have the variable pay. This variable pay is not fixed. You know, it varies per month. You know, when we are talking about variable pay, then we are talking about the likes of bonus, commission, overtime, inconvenience allowance, shift allowance, you know, vacation pay and all. Then also, a component of payroll is statutory deductions. We have two types of statutory deductions. We have the one called employee statutory deduction, and we have the other, employer statutory deductions. So employee statutory deductions, let me move. Okay. So for employee statutory deduction, this simply means that these three deductions, okay, sorry, this simply means that you would actually contribute these three. These three components will be deducted from your salary. We have what we call employee pension. Please confirm if you can still see my screen.
Yes, we can.
Okay, so basically employee pension is an employee cost, which is computed as 8% of basic housing and transport. Pension is actually regulated by PENCOM, that's National Pension Commission. Also, pension must be remitted on or before 7th day after payment of salary. That means if your company paid August salary as at 31st of August, you must have remitted pension before September 7th. That's the basic guideline, that's the regulation. Although most companies default in Nigeria, and we are all aware of this. The second one there is National Housing Fund, NHF. NHF is also an employee cost. That is, this is coming from your salary. Fine. NHF is 2.5% of basic salary. You can contribute this NHF for a minimum of 6 months in order to be able to have access to a mortgage loan. So basically, when you start contributing, after 6 months, you can walk down to Federal Mortgage Bank and apply for mortgage loan. Mortgage loan is basically for housing purpose. So NHF is regulated by the NHF Act. Also, NHF must be remitted on or before the last day of subsequent month. That is, by end of September, you must have paid NHF for August. Okay, so the third one there is PAYE. In my last session, I discussed about, in fact, I showed how to compute PAYE. I tried to bring it down for people so that it will be easy for people to compute. So in Nigeria, we adopt what we call PAYE system for employee tax. And it is a tax rate that progresses from 7% to 24%. As we move on, I'll still show you in one of my slides. You get to see the various pay bands, the various tax bands, sorry, for PAYE. PAYE must be remitted on or before the 10th day of the subsequent month. That is, if you have paid salary, August salary as at 31st of August, you must remit PAYE before September 10th. So that's for employee costs, employee statutory costs. Moving on, we have employer statutory costs. These deductions, they are there for the employer to bear. This is not coming from your salary. This is basically an employer cost, your company's cost. Your company will be the one to pay for all this. So the first one there is employer pension. When I was talking about employee pension, employee costs, there's a part where I mentioned employee pension, which is actually 8% of basic housing and transport. This other part is actually called employer pension, which is an employer cost, and it's computed as 10% of basic housing and transport. So after you have contributed 8% and your employer too has contributed 10%, that's 18% in total. That's 18% of your basic housing and transport. Both will be added and it will be remitted into your RSA account. Your RSA means retirement savings account, popularly known as pension account. The next there is NSITF. NSITF means Nigeria Social Insurance Trust Fund. Well, this scheme is also known as ECA, Employees Compensation Act. The law states that this is a social insurance designed to provide compensation to employees who suffer injuries within an organization, or when you are going to your office from your home, that's to and fro from your office to your house, or from your house to your office. Some part of it also covers debt as well, but NSITF is computed as 1% of your monthly gross. That is, your company is remitting 1% of your monthly gross, that's every month, to NSITF in order to cover for such incident. That means this is not coming from your salary. This will be paid by your company. Also, it must be remitted before the end of subsequent months. Also, we have what we call ITF. ITF means Industrial Training Fund, ITF. So ITF basically promotes and encourages the acquisition of skills in the industry. Or let me say in Nigeria, we are trying to look at indigenous trained manpower for people. So basically, the ITF covers this part. It's an employer cost as well. It is 1% of your annual earning. It has to be remitted before the end of first quarter of the next year. That is, as at March 31st, 2022, this year, we must have remitted our 2021 ITF. That's the meaning. The next there is group life insurance, GLI. So GLI covers debt, whether it is in the organization, within the organization, or to and fro from your house to your office. This covers any type of debt. And basically, it covers for people under the age of 60 years old. That is, even in Nigeria, the law states that as soon as you get to 60 years old, or you have spent 35 years in service, you should retire. So basically, this is for people under the age of 60 years old. And also, it depends on the negotiation that you have with your insurance broker, or maybe your insurance company. Although there's a computation to it, whereby you get your sum assured, then the premium that you'll be paying every month. But some companies know how they negotiate and bid down the price. Also, there's HMO. Well, most of us, we know HMO already. That's Health Management Organization. As an employee of an organization, you'll be placed on HMO. It is mandatory now, according to the law. You must place your employees under HMO plan, at least, even if it's going to be the lowest package or lowest plan of one HMO company. This is a form of medical insurance. You pay premium every month. You ensure that your employees are all feeling well. Okay, what do I have? Sorry, okay, so I'll be moving to payroll management process. So after my presentation slide, I will still show you the Excel sheet of how to compute payroll. So let us just take it one step at a time. Okay, so a typical payroll process looks like this. So the first process states that you, as the payroll specialist, you would request for payroll inputs, such as if you have new hires, if there are exits, variable pays. Variable pays are the likes of overtime, inconvenience allowance, shift allowance, commission, and other things. Then if there is any salary review or promotion during that month, then also if there is third-party deductions and any other payroll-related inputs, you have to gather all this information before the 10th of the month. That is, okay, today is 22nd. Okay. Just let us move on. So now the second step is checks and computation. So as you are getting all this information, you are already imputing all these data into your Excel sheets, and if your company has an ERP or software or any HRIS that you are using, you can start imputing, because before you know it, the month will get to an end. So the third step is to put all this data into your ERP. The first thing is getting all this information, putting them in your Excel sheet to check. You need to do some checks. By the time you get to our Excel presentation, you understand what I'm talking about there. So the third step says data input into your ERP. that is all these new hires, exits, variable pay, you actually impute them into your ERP, your software, your payroll software.
Hello, Ahmed. Are you still there? Can we still hear Ahmed? If you can hear him, please drop a message in the chat.
Right.
Hello, Ahmed. It appears like your network is fluctuating. Hello, Ahmed. I think we've lost him. Please, let's hold on for him. I'm sure it will reconnect anytime from now. Okay, already some questions have started dropping. Let me see if we can take one or two of the questions. All right, while we wait for him. So Akim Akinwale says, what percentage of employees have benefited from the National Housing Fund in Nigeria? Okay, that may be a difficult question for our facilitator for today to answer because he doesn't work for the NHF. He works in the private sector in an airline specifically, and he's just principally teaching us about payroll. But I suspect that if I may make a guess, again, this is a guess, maybe less than 20% or less than 10%. And I'm sure a lot of people don't even apply in the first place. Once you don't apply, you cannot get it. However, for all who apply, I don't know what percentage of the people who apply are able to get it. Okay, Ahmed Adeosun, you need to unmute yourself, but just a minute. Let me see, I may need to make you co-host again. Okay, so Ahmed, I've made you co-host.
Okay, sorry about that. My internet went off actually. Okay, so let me quickly share my screen.
Let me just take one more question as you settle in. All right, so Akim Akinwale, I hope I've been able to provide some little response with respect to your NHF question. The other question here says, how will employees that sustain injuries benefit from the NSITF if their employers are not registered with NSITF? The truth is, if their employers are not registered with NSITF, and if they are not paying their premium as a when due, they can never benefit from it.
Yeah.
Now, when you are also registered and you are paying as a when due, when there are injuries, you also need to report the injuries within a particular timeline. If you do not report the injuries and provide necessary documentation and substantiation, you may not be able to take advantage in that particular instance. Ahmed, confirm you are good to go.
Yes, I am. Thank you very much.
All right, you can proceed with your presentation.
Okay, thank you. And thank you for the answers too. Okay, so let me just pick it from step 4. Yeah, so I said you run payroll, then you try to check with your Excel sheet. Both must tally, both must jive. That's accounting word. Then you know that, oh, everything is okay. There's always timeline. I'm sure you are seeing the timelines there. Then also from there, you can then generate your payroll report, you know, various reports. Maybe if you also need to generate, what is it called? Variance reports and also consolidated reports. Then you move to the next step, which says that you should go for approval. So approval request is actually for, you know, you submitting to your probably head of HR. Well, it depends on your company, or your chief head of HR. So from there, after approval, Then you submit your payroll to the finance department, because it is the finance department's responsibility to actually pay. So most people, they get this part wrong. A lot of times people would come to me and say, oh, Mr. Ahmed, I've not received my salary. What is going on? We try to explain to them every month that it is the responsibility of finance to actually pay. But for the payroll manager, it's for you to process and send to finance. So they always think that it is the payroll manager that will pay. So that step 7 explains that. Okay, the next step is step 8, which is, okay, employees will get their salary. Now, after getting your salary, the next thing is that the payroll specialist or manager needs to quickly send out Payslip. So it is either you are sending it via your ERP, or you are sending via email, depending on how you do it in your company. Then the last stage, because after salary payment and Payslip, that's not the end of payroll process. The last stage is now to generate statutory reports. You have to generate PAYE reports, pension reports, NSITF reports, NHF reports, and all other statutory reports, because all these must be sent to finance for remittances. And that should be before 5th of the following month, so that you remain compliant. Okay, so I'll soon be moving to computation. Now, just to quickly give you a brief on PAYE computation. We did this in the last session, so just to explain to you once again. So now PAYE is actually pay as you earn, whereby the tax rate progresses from 7% to 25% of taxable income. Meanwhile, this taxable income, it has 7 bands, from 300,000 naira to 3.2 million naira. That's actually annual figure. Okay, PAYE must be remitted on or before 10th day of the following month, which is correct. Okay, now this is actually tax terminologies. We have what we call gross earning. Then we have tax relief. There must be tax relief. How are you going to get your tax relief? You need to get your CRA. How are you going to get your CRA? CRA is 20% of the gross that the new gross that you're going to get, plus the higher value between 1% of that gross, or 16,666 naira.67 kobo. This CRA plus employee pension, which is 8% of basic housing and transport, plus NHF, which is 2.5% of basic salary, plus AVC. AVC means additional voluntary contribution. That is if you have AVC, it is voluntary. Then also, if you have life insurance that you are currently on, although you can only enjoy the premium of the previous years, that's the previous year. That is, as we are in 2022 now, you can only enjoy the life insurance scheme that you did in 2021. Then after getting all this, to get your taxable income, all you need to do is just to do gross earning minus this tax relief computation. Then you get your taxable income. So the taxable income will now flow into these 7 bands. We have the monthly and the annual here. So depending on, because even the name states pay as you earn, that means the higher your salary, the higher your tax. So basically, this is tax computation table for you. So now I will be moving to my Excel sheet just to show you how to compute payroll. So in the meantime, I don't know if you have some questions or if we have already answered some of them before I move to my Excel sheet. Let me see. Okay, I don't think we have any now. Let me quickly share my Excel sheet. Hold on, please.
So I can see your question, Inamdi. Inamdi is saying here, what is the percentage of NSITF and ITF? I believe for both is 1% of gross. NSITF is 1% of your gross remuneration, while I believe is same for ITF. I hope my memory does not fail me. Okay, thank you so much, Omotola Badnos. You have also validated that it is 1% of gross. All right, thank you so much, Cheta, Esther, for your commendation. Okay.
Okay.
Yeah, Ahmed.
Okay, thank you so much.
Yeah, welcome.
Yeah, please confirm if you can see my screen.
Yes, please. We can.
Okay. So a typical payroll looks like this, whereby you would have employee ID, the name of the staff, well, location, designation, department, grade level, you know. This can actually be adjusted, or it depends on your company actually. But the most important part is where we have the figures. So let's just move to where we have figures. And payroll is actually processed per month. So that's why we have monthly payroll here. So let me start from column O, so that I'll be able to explain every column to you one by one. Okay, fine. We have monthly gross payroll. This 750,000 naira that you are seeing here, this simply means that is the monthly gross for this first staff here, staff 1. That is, this 750,000 naira multiplied by 12 is the person's annual gross, which you would have communicated in the person's offer letter. You know, usually when companies issue offer letter, they will communicate annual gross. Meanwhile, that is not what is going to eat your account. So basically, I have for staff 1, 750,000 naira, staff 2, 600,000 naira, staff 3, 450,000 naira. This is just a sample. We can tweak it, we can use any figure. Now, there's what we call pro rata in payroll, although most people know it as prorating. So basically, because this is September has 30 days, and this is using calendar days. And if all these employees, if they work full month, then the pro rata would be 30 divided by 30, simply because they have worked full months. They have worked for 30 days in 30 days. That's why we are having 1 there. Let's say, for example, the first staff exited as at 20th of September. That means that pro rata will not be 1. Let me do something here. That means this 30 will be 20th. You know, I said the person left as at 20th of September. You'll see that it will change. And everything has changed because, you know, I have imputed my salary, my formulas already. Okay, so let me go back. You know, this is just an assumption that, oh, they all worked full month. Fine. On pro rata, yes, it is 750,000 naira, because if you know how to use Excel well, you understand what I have done here, which is simply the pro rata times your monthly gross. Then now to this part, basic housing and transport They are the most important components of your gross, these three. So now, ensure that your basic housing and transport are not less than 60%. But see what I have here. I have 50, 10, 10. That's already 70, which is above 60%. Standard practice, your basic housing and transport altogether should not be less than 60%. So already that means I am correct. So now this simply means I have 50% for my basic allowance out of my gross salary. My housing is 10% of my gross salary. You see that everything is pointing at your gross salary. Transport allowance, 10% of your gross salary. Please note that this percentage that you are seeing here is just an assumption. This is not, well, there's no standard, or let me say there's no fixed percentage rate for components of gross. The only thing you have to have in mind is that your basic housing and transport must not be less than 60%. Some people could do 20, 20, 20. Already 320s here are 60. So that means you are also practicing the correct thing here. I don't know if you understand, but I am using 50, 10, 10. You know, I just did this based on assumption. So other allowances can be anything. So far, your basic housing and transport is not lesser than 60. Okay, so then you have total fixed salary. Recall in my presentation slide, my PowerPoint presentation slide, I mentioned something on fixed pay and variable pay. This simply means that irrespective of whatever you are doing in a month, you'll be entitled, this first person will be entitled to this 750,000 naira because it is a fixed pay. No matter what, you get this amount. Then, if you are now entitled to variable pay, then you will move to this part. You'll see that I don't have anything there. Let's say for the month, your overtime is 20,000 naira. This is just an assumption. And let's say shift allowance, you should be paid 15,000. So all this information, you would have gotten it before first 10 days of the month. So this is actually part of the payroll process that I mentioned earlier. You must have gotten all these things before you process payroll. So let us move on. Then we also have the deduction part. Recall I mentioned that there are some deductions that would be employee costs. That is, they will be coming from you as an employee. We will have to deduct these three components from your total gross. They are NHF, employee pension, and tax. NHF is 2.5% of your basic salary. You have it there. Employee pension is 8% of basic housing and transport. You have it there. Then tax, which is PAYE. You know, if you check my formula bar, you will see that I have a lot of formulas there that I have already configured there. So this simply means there is a complex computation for PAYE. After this session, I'm still going to share the link for you to have access to our previous learning sessions, whereby you'll be able to see the way I have explained how to compute PAYE. You know, when you watch the learning session, you'll be able to get that. So let us move on. So we also have some other deductions per month. So it could be loan deduction, cooperative deduction, you know, salary advance. Some people could get salary advance before salary payment, so you have to deduct it. You know, we have a lot. Then you get to where we call net salary. This is actually what is going to eat your account. Net salary is just your total gross minus your total deductions. That is all the allowances I've been talking about: basic, housing, transport, utility, other allowances, all of them together, minus NHF, pension, that's employee pension, and PAYE. Then also, if you have other deductions like loan deduction, salary advance, cooperative deductions, and all, then you will get your net salary. So at this point, these three employees would get this particular net salary. Now, I mentioned employer costs too. Fine. You as an employee, you just benefit them. You will not get the money, but it's a form of benefit to you. There is ECA, popularly known as NSITF. I explained it earlier. It's 1% of your gross. So this simply means that for this first staff, this first employee, the company shall be paying 7,500 naira on behalf of this person. Then the company shall also be paying 10% of basic housing and transport as employer pension contribution on behalf of this same employee. Then the company would also pay ITF, 1% of your total earning. Then there's what we call group life insurance. Fine. Some companies could negotiate for a flat rate, but the main computation for group life insurance is actually your annual gross multiplied by 3. That will give you sum assured. Then that sum assured times 6 divided by 1,000. That's called 6 per mil, something like that. Insurance people would know that. That's how to get group life insurance premium. So you will see in my formula bar, you will notice that I did all of them divided by 12. That is, I tried to now bring it down to per month because payroll is processed monthly. Then HMO is usually flat rate. This is just an assumption. I just assumed that maybe your company is paying 60,000 naira on your behalf annually to be on one HMO plan. And that means it will be 5,000 naira per month. That's why you're seeing 5,000 there. So from there, you will see what we call account name, bank name, account number. This is just an assumption. Then basically per employee, this is what you are costing the company. To get an employee's total employee cost, that means all you need to do is just to add the total earning plus group life insurance, HMO, NSITF, ITF, employer pension. That's what I have done here. So it simply means, okay, let me double click so that you see what I picked. So this simply means first thing there is total earning, 750,000 naira, plus NSITF, employer pension, ITF, group life insurance, and HMO. That's actually what you are costing the company as a staff. So furthermore, I thought about outsourcing firm. Outsourcing companies, their payroll will not just stop at column BM. Their payroll will furthermore state, if you are outsourcing for a client, you have to get service charge. So this is also an assumption. I am assuming that your SLA with one of your clients is actually 10%, in which you are managing this payroll for. Then that means 10%, that means you now charge 10% of total employee cost. See what I have done. 10% service charge on total employee cost. Then there's usually value added tax on service charge, which is currently 7.5%. You charge that too. Then you will now have your own new cost, which is total cost to the company, popularly known as TCC. When you hear some payroll specialists talking about what's the TCC for someone, you already know where they are going. So TCC here means the total employee cost plus the service charge plus the VAT on service charge. So here, for some companies, actually, when they want to make decision on whether to outsource their payroll or not, they try to check this total balance. Imagine if your company wants to outsource this payroll now, just for 3 people. That means, let me see the variance. That means they will be paying an extra value of 216,494 naira. That is, if they don't have a payroll specialist in-house. So that's why sometimes some companies, they make that decision of employing a payroll specialist rather than outsourcing their payroll. So after payroll, I said something on Payslip. So basically, what you need to do is push Payslip from your ERP or payroll software. It's fine. But I can also quickly show you a typical Payslip, how it looks like. Sorry, are you still seeing my screen?
Yes, sir.
Okay. For Payslip, the concern is just for employees. Employees just want to see their allowances plus what is coming to them. That's the net salary. So I just want to quickly show you something here. Just to show you that there's a way you can also do manual Payslip. This is a sample. Okay. I will beautify this thing within 1 minute now for you, and you just see everything at once. Okay, do I need this? Okay. I don't think I need currency too. So another thing is that after this session, we'll still share the link to this video. Then when you rewatch, you get some of these things at once, because maybe I am too fast, but by the time you rewatch, you understand some of this. So okay. So this simply means that, okay, let me hide for these 2 other employees. This simply means that this guy here, let me show you this guy's payslip. This is this guy's payslip. A typical payslip looks like this. So this simply means, so when you get your payslip, sometimes, it will look like this. But I have done, this is just a manual work. This is the same thing that the ERP will send to you. So this simply means this person's monthly gross is 750,000 naira. but the person's net salary is actually 585,822 naira. So there's a way we'll now PDF this file, then we send to you. So, you know, it will look nice. Okay, let me go back to the presentation slide. We'll soon end the session. I know we should be done before 7. This is 6:51. Yeah. So let me go back to the slide. And if you have questions, let us pick like 4 questions, then we move on. I'll be dropping the link to the previous learning sessions so that you can watch again and also get to understand the PAYE computation. Then also, if you want to join our group, our HR mentorship group, you need to fill a Google form where our executives will check, then you'll be admitted. Let me first of all share that. I'm trying to pick the link. Please check the chat box. I just dropped something now. Okay. Okay, so if you want to go through our past, because this year already we've done more than 15 learning sessions, and I'm sure by the time you watch them, you would really learn a lot. So I've also shared that you can go and watch our videos, our learning sessions, you know, basically touching all parts of HR. So at this junction, I am done with this learning session. I am done with mastering payroll management. So if you have any question, you can. Okay, sorry, someone just asked me one question. So how do we get the formulas you used for computations? Oh, okay. You can, okay, you know what? Let me drop my LinkedIn page. So for further questions, you can actually view my profile and, you know, send me a message. Yeah, Bola Joko, yeah, you can go ahead. You have a question. You are raising your hand.
Hello, Bola Joko Mimo. Your hands are up. You have the floor. You can please ask your question. Anyone who has a question, please raise up your hand. We will recognize you and enable you to speak.
Yeah, please, you need to unmute Bola Joko.
No, she's an admin. She can unmute by herself. Meanwhile, Ahmed, I will suggest you quickly go to the chat box and see the questions there so that you can respond to them.
Okay. Okay, so I'll be checking from down upward. Okay, question. Given the clarity of the total employee cost, is there a way to quantify the total employee value so that the employer can see the, okay, yeah, this is possible. The only way, okay, this question is coming from Akim Akinwale. So the only way an employer can actually cut some of these costs is to negotiate further with the likes of maybe HMO and group life insurance company. That is, whatever you are going to charge them would be higher, something like that, so that the company too will be able to see profit. Although you're already seeing profit in your service charge, but that's how some outsourcing firms actually get more profit. So there is also a question from Akorede Daniel. In respect to ETC, can we include paid leave? ETC. Are you talking of TCC? Okay, I think that's TCC. So paid leave is actually off payroll. Sorry, paid leave is actually the normal leave that you go for. You are actually entitled to leave as an employee. So definitely, let's say, for example, you will be on leave throughout September. You will still be paid your normal salary because it's a paid leave. I think I've answered your question, Akorede Daniel. Then there's also another question from Adeaga Emilola. What's the difference between NSITF and group life insurance, please? Okay, so NSITF is basically for injuries and occupational diseases, such as maybe if someone is handicapped through accident, and it has to be within the company's premises, and or if you are coming from your house to the office or going back home from the office, that's to and fro office to work, any form of accident or injury sustained will be covered by NSITF. But group life insurance covers debt, any type of debt, whether it is in your house, whether it is on the road, whether it is in the company's premises, any type of debt, only debt, that's for group life insurance. Yeah, I think I've answered Adeaga Emilola. Okay, there's another.
Can I ask my question?
Okay, yeah.
Okay, so I wanted to ask, thank you very much for this session. I wanted to ask, you said something that our BHT by standard practice should not be less than 60%.
Yeah.
Can I ask why? What's the principle behind that?
Okay, well, there's no basic law for that. But well, with my little experience and by standard practice, it is usually more than 60%. Because that means if your BHT is less, then there will be what we call tax evasion. It could affect the tax as well. So that's why most companies do more than 60%, because BHT, by the time you do your tax reliefs, the likes of PAYE, the likes of NHF and pension, they are being computed from this same BHT. So there is a way people try to escape paying tax. That's
okay,
why it's that way.
Okay, but what's your thought on the basic being 15%? Because I saw you used a higher percentage than the other ones were. So what's the implication of that?
Okay, well, that's just an assumption. I just use that.
I know it's an assumption. I'm just asking your thoughts.
Okay, well, I felt basic is the main component of gross. I felt, okay, basic should have half of it. Then others, I can share others. Then also, I also did something like 20-20-20, like 20% across board for the three of them.
All right. Thank you, sir.
Yeah, you're welcome. Okay, I think Akorede Daniel is raising up his hand. Okay, another question.
All right. Thank you very much, Mr. Oshuamed. Now, I just want to clarify the question I asked earlier on.
Oh, okay.
I'm sorry, I'm in traffic, so that's why I'm getting noisy from there. So, given the CTC, that's the cost to company. In some industry, you pay both the leave and you also pay allowances. You understand? That's leave allowance. So, while calculating the cost of you consideration the leave allowance for that month.
Yeah, it has to be computed. Yes, I got you right now. So for some companies too, you could add your 13th month. So basically what he's asking is that if you have a system or a package that states that you'll be paid a particular amount as leave allowance whenever you are going on leave, is an employer cost, fine. So it can be added to the TCC as well, same as 13th month, because yes, this is actually part of the cost that we are going to incur on each employee. Akorede, I think I have answered your question.
We have another person, OG, on the line. She has a question. Go ahead, OG.
Okay, thank you very much for that insightful session. I want to go back to the question asked by the leader spoke before this last person. Talking about the portion for basic. You see, in some establishments, basic is the main focus. So every other allowances will be a product of your basic salary. Because I was looking at that your calculation also when I saw 50% of gross. Your basic should determine what your gross will be, not other way around in some establishments. But I think that should be the best practice. If you are negotiating salary, what you negotiate first in other places is basic. So now you now look at, okay, gross, your basic, your housing can be a percentage of gross. You know, if we look at NGIC, some establishment will tell you 50% should be the housing. Some will tell you it's 40%. Some will tell you it's 45%. So that basic actually determines what your gross will look like in other places. So we should just look at that area and maybe for everybody to know about this. So it's not mandatory that gross should come first. Because by the time gross comes first, when you start mutilating, you realize at the end of the day, basic will be too low. And people focus on basic because of your final pay when you are leaving. I think you understand what I'm trying to do.
Yes. Okay, yeah, thank you. I understand you well. Okay, that's why I actually used 50% for the basic, you know, so that basic would actually have the higher percentage, or let me say the higher part of the gross. Some companies even use the whole of gross as their basic. That's why I said it depends on your company's payroll structure, you know, the way you are going to determine your gross components. But fine, yes, you are also right. Yeah, you are right. And thank you for the contribution as well. More questions? Okay, Adiaga Emilola.
Hello, can you hear me? Good evening, everyone.
Yeah, we can hear you. Good evening.
Good evening, sir. So I just want your advice on, okay, so let's take, for example, how do you think I can advise, since you said the best practice, the standard practice is 60% as all the BTH, PHT should not be less than 60% of the total gross. Then what will be your advice, or how do I advise my employer if the employer is not willing to even pay pension or do NHF? You know, I feel it will be difficult for me to advise such an employer. So what would be your own advice to such an employer? Because I was thinking before now, this is the first time I'm hearing that the best practice is 60%. It shouldn't be less than 60%. So I was initially thinking that for example, schools don't really want to pay pension. They don't want to pay NHF. So I was thinking, oh, if I could advise them to make their basic lower very low, say 10%, the housing 10%, transportation 10%, it's to them, it will make a little sense, then they might accept it. But in this case now, you're making me understand that it's the best practice is saying that it shouldn't be less than 60%. What would be your advice? Or what do you think? How do you think I can advise such an employer? Thank you.
So let me help you, Ahmed. Is it okay?
Yeah, sure, you can, my okay.
So, Emilola, let me say this clearly and to any one of us here so that we can learn. So when we say something is best practice or we say something is general practice, one of the ways this is arrived at is a couple of good standard organizations are aggregated and the average of what they do typically forms standard practice. Now, let me just give you examples. So if we take like the top 24 banks in Nigeria, can you compare any of the top 24 banks in Nigeria with Oluyemi Nursery and Primary School at Yanoba? So when you are providing consultancy or HR support for a small business, in the area of discretion, when it is not something that is law, then you may go for a lower rate for them. Note, there are areas that it is purely discretion. So basic housing, the computation or the percentage is largely discretionary. Now, if such a primary school, a private school is not paying at all, and you now get them to say, okay, make your basic 10% and they are paying, that's a quantum improvement over not paying at all. So you need to be patient and work with your clients or your school from what they can afford. Otherwise, if you say you want to push them to best practice, then you will push them to do nothing. Sometimes half loaf is better than none. Ahmed, you can go on with your response. Again, don't forget to check the chat box. We'll drop some information for us on the chat box. If you're interested in a full-day masterclass, please sign up to the WhatsApp group. You'll get more details. Ahmed, over to you.
Okay, so you've given a perfect answer already, because my first response would be that we shouldn't encourage any management of any company, be it school or any type of organization, to be looking out for, oh, we don't want to pay pension, we don't want to pay tax, we don't want to pay this, we don't want to pay that, because they are actually statutory, they are mandatory, they are important. So also on the part of what you can do to your basic housing and transport, just to ensure that you pay minimal tax, fine. So in fact, some companies, what they do is that they don't even have components of gross. What they do is, okay, for example, that Excel sheet that I shared, what some companies do is just to say that is your basic salary. They don't have housing, transport, and other allowances. So for such company, it simply means their pension would be on that gross. They call it basic salary. And also, whenever they are calculating their tax, that means their tax will be very huge. That's why most companies have to break it down. It's better to break it down so that you will not be paying a lot of tax. Imagine that 750,000 naira gross being the total basic salary. The tax will really be huge. It will be huge. So I can only advise that, well, you guys can just work on the BHT. Then for schools, as you have said, I don't think most schools, they use all these components of gross. What they do is just, oh, we'll be paying you 50,000. I don't think some of them even pay tax. They just have all these funny payroll. So the best advice you can give to them is to use the standard practice, is to use the right thing. Let them understand that they need to do the right thing. Next question.
So you can check quickly on the chat box if there are questions.
Okay, I can see someone just dropped something. Okay, we have scheduled, blah, 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 blah. Okay. Some people are. Okay. Let me just scroll up again. Okay, I think a lot of people are just advertising via the chat box. Yeah, something. Okay. Gloria Sonny said this program is adding more knowledge to me. Okay. Thank you.
Cassava HR asks for if you want payroll template. It was shared some few days ago on one of the HR mentorship group. If you ask again on your group, it will be shared with you again. Let's quickly take our last caller or last question for today. Gift.
Okay.
Okay, we'll take
good evening.
Yeah. Good evening.
Good evening. Thank you so much for this session. I've learned a lot. Thank you. So my question is in terms of say payroll audit and compliance. What are the other things you think should be checked apart from say PAYE, 8% employee pension, 10% employer pension? What else do you need to check if you are going to do payroll audit for compliance sake?
Okay, so payroll audit focuses on all the information in the offer letter, then what we are paying. So first thing first, you first check the, okay, let me use myself as example. I have an offer letter now. The offer letter states that you'll be paying me 15 naira. Now, the first thing the payroll auditor would check is, okay, this is your offer letter and this is the payroll. We actually communicated 15 naira in your offer letter. Are we paying the 15 naira in the payroll? They check that. That's the first thing. The second thing is to check for the role. Sometimes there could be mismatch in the role. That's job title. They also check level. Then you can then move to the figures. You need to check if you're actually computing all these components using the normal standard. That is, we are checking is the pension, is the computation on the required 8% of BHT, is the NHF computed as 2.5% of basic, is the tax computed using the required tax table. I don't know if you get. So basically, they check figures a lot for payroll. Then also, the last part of payroll audit would now be remittance date. They also check if you are compliant. You know, for pension now, you are supposed to remit pension before the 7th day after salary payments. You know, they check all these dates. They request for your pension evidence, pension payment evidence. They check with the payday per each month. I think that's all for gifts.
All right. We'll take Sheyi and take a few announcements and we end it from there.
Okay.
Sheyi, where are you? Sheyi, are you still available? Okay, I can't seem to see Sheyi again. All right, let me thank most sincerely Adeosun. Okay, Sheyi has come. Sheyi, quickly.
Okay.
Okay, thank you, Yemi. Can you hear me?
Yes, we can hear you.
Thank you, my brother. I just have one or two observations. Some organizations will not tell you they are unionized. Okay. And your first pay slip, you say union deduction. Okay. It's good to observe that will be deducted from your pay. It's not the company that pays. Some other organizations too is doing audits. They realize that they need to pay ITF. I didn't see people really talking about ITF. Is it because it's an employer's cost? And I realized that most HR practitioners don't even take advantage of getting refunded for trainings because they are not even aware. So, but my question for you, my brother, is in all this composition and composing things, what's the best practice for exit pay? Thank you.
Okay. Thank you for the observation. Yeah. So for exit pay, it is at the company's discretion. Some companies, they could say, as you are exiting now, we want to do what we call end of service payouts. So, depending on the financial status of the company, they could say, after you have spent, let me say, a minimum of 10 years, because they don't pay all employees end of service pay. You too, you must have been loyal to the company. You must have stayed for a particular period. So now that scheme, that particular pay has a guiding policy. So the policy is usually around the period that you must have stayed. Then also that pay is not, I don't think there is a particular standard for it, but most companies, what they do is they could say, okay, we'll pay you your annual gross as your end of service pay. Some companies could pay you ×2 or ×3 of your annual gross as your end of service pay. Some companies can say, oh, because we don't really have money, you know what, we'll just pay you your basic. Meanwhile, maybe your basic is just 50%, just like the sample that I shared earlier, just 50% of your monthly gross. So, and some companies don't even pay end of service pay at all. So it is somehow at companies' discretion. But for most companies, well, in my head, I think annual gross is okay.
Okay, so to a large extent, back in the days, there's what we used to call gratuity. Okay, and when the pension thing came to full, many companies did away with the gratuity. However, there are still some companies, either due to, as part of their own employee value proposition, or because they are unionized, and because they have, as part of the collective bargaining agreement with the union, they have agreed a certain percentage of either annual pay and with certain minimum conditions, like Ahmed said, maybe 5 years, 10 years, 7 years. Some will even prorate it. In other words, the longer you stay, the higher the percentage in some instances, because they're also trying to use it as an employee retention tool. Don't worry, in the next few days, I think Saturday, if I'm not mistaken, we'll also have a session on industrial relations, on union management and HR, because these things have a way of impacting. Because once you agree something with the union, until you agree to change it, it now becomes binding. But if it is a one-man business, for example, it's your contract of employment that stands. Or if it's an organization that is non-unionized, it's your contract of employment that stands. Okay, just to chip that in. And the very last person we will call is Joseph. Joseph Enafe. You are our last speaker, and I mean last.
Okay. All right. Good evening. Thank you for the opportunity to learn. Yeah. Okay. So I would just basically want to ask, what are the basic requirements to calculate terminal benefits as against the end of service payout? So terminal benefit now for an employee that just resigned and you're just paying off. What are the basic calculation for that?
Okay, so for most companies, if you say terminal benefits, that's just saying is more of end of service pay. So if you are resigning, let's say today, first thing first, you must have resigned on the 23rd of last month. That is, if your contract states that you have to give 1 month notice, then your salary will be prorated for this month. That's one. That's aside. Then if such company has gratuity or end of service pay, that would also be calculated and be added to your pay. Then also, if you have any outstanding debt with the company, it could be one of their equipments, or it could be maybe advance one, or maybe loan. It will be deducted. If you have any debt with the company, it will be deducted from you. Then also, okay, I think that's all for that. And it has to be that the company has it in their policy that they are paying end of service pay. So basically, that is what you'll be entitled to. Then also, outside of your employment, then you can then chase your pension, maybe 25% before you are 60, and maybe after 60 years, you get the rest.
Well, thank you so much, Ahmed, for that. Let me just reiterate one point you mentioned in passing, which is important. So you need to have policies, your payroll policies. You need to have your exit management policies. You need to have these things captured. Where you are unionized, you have what we call condition of service or collective bargaining agreement, CBA. Where you are not, it is your policy that guides. Typically, this policy may either be in the employee handbook or a standalone document that is visible, accessible to the employee. So as an employee, I should be able to determine my exit pay by myself based on what the policy says. And sometimes there are some words that can be synonyms, technical synonyms. So you will have terminal benefit. Some people will call end of service, okay? Some people will call it exit pay. Don't let the semantics confuse you. They typically mean the same thing. But you also need to know, and Ahmed also alluded to that sometimes when you calculate terminal benefits, it may be that it is the individual that is owing the organization. You also need to put that into consideration. Ahmed said that, but I needed somebody to hear that. So let me give you an example. Maybe the employee are taking a loan from the organization, or in some organization, they are what we call upfront payments. Some organizations, they give you housing upfront. Maybe in January, they give you housing for 1 year. Some organizations don't pay housing every month. They pay annually, and the intention is maybe you use it to actually pay your rent. So maybe in January, they paid you housing from January to December. Then in March, you are exiting. You are owing the organization housing from March to December, and they will factor that into the terminal pay. So you may be invoiced, or you may need to reimburse, okay, just to let one or two people just get that clarity. Ahmed, any closing remarks? Any closing thoughts?
Okay, so thank you very much for the opportunity given me to come and facilitate again. You have been a great mentor to me, so it's always a great honor to be here to talk to people, about what I do, especially about what I do, and also is a great honor for me, for you to believe in me, to come and have this session. So for everyone, thank you for hanging along. I can see that we still have a lot of people online, despite the fact that we've been touching questions since like 30 minutes ago. Still have a lot of people hanging there. Yeah, thank you very much to all the listeners. Thank you. That's all I have. Thank you.